Hello, and welcome to the second phase of training for breathing space. Before we talk about some new topics, let's just have a brief recap on what we covered in the first two presentations. There will be two types of moratorium, the regular breathing space moratorium and the mental health crisis moratorium. The go live date will be the 4th of May 2021. The debt advice provider is the key to the whole process. It's their decision as to whether a breathing space is appropriate. We will get notified via the Insolvency Services online portal. During the breathing space moratorium, recovery action is frozen, although certain things already put in place can continue. The protections last for 60 days. The debt advice provider will conduct a midway review to check that the debtor is still eligible. Not all debt can be included in the breathing space. There are specific rules as to whether council tax and non-domestic rates can be included, and we'll be discussing these in more detail in this presentation. Contact between creditor and debtor is restricted, and care should be exercised with whatever letters or emails we send. A breathing space can be cancelled early if the debt advice provider deems it's necessary, or it will happen if the debtor dies. There is a mental health crisis moratorium for debtors receiving treatment for a mental health crisis. Those debtors don't need to receive debt advice at the start, and the protections last for 30 days after the treatment for a mental crisis lasts. In this presentation, we'll be adding some more detail to some of those points and discussing new things. We're going to cover the latest information about creditor notifications, more detail about qualifying debt and non-eligible debt, future instalments, ongoing liability and liability changes, more advice about contact between creditor and debtor, council tax joint and several liability issues, summonses and liability orders, attachment of earnings and benefits, enforcement agents, limited companies and directors, and credit ratings. Rather than have a set of notes specifically for this presentation, a new set of notes dated March 2021 has been uploaded to Vic, which replaces the original notes and which contains both the information from the first presentations and also the new topics listed here. Since the last presentations, we have learned that the Insolvency Services online portal will not be operational for the 4th of May. The Insolvency Service has produced a series of videos which explains how it should work. This is the website address for those videos, and this address is in the new version of the notes. In the first presentations, we said that debts are classified as being either qualifying debt or non-eligible debt. Qualifying debt is debt that can be included in the breathing space moratorium. Non-eligible debt is debt that can't be included. And we gave some examples of non-eligible debt which were relevant to our work in revenues and benefits. And to explain it, we said that the word accept in points 2 and 3 on the previous slide effectively means that whilst ongoing council tax and business rates instalments cannot be included in a breathing space moratorium, any debt which is unpaid instalment arrears or debt for which recovery action has commenced will be included. But we need to be clearer as to what that means and what effect it has on future instalments and ongoing liability. So are future instalments included in the moratorium? The legislation states that council tax and non-domestic rates for a financial year is a qualifying debt if 1. All the instalments for that year have fallen due and any of those instalments has not been paid, or 2. A reminder or further notice has been served on the debtor. This means that if all the instalments have fallen due, either future instalments have been forfeited, or they're at a point in the year where there are no future instalments, then the whole remaining liability will be included as qualifying debt. Or, if a reminder or further notice has been served, whether they have brought the account up to date or not, then the whole remaining liability will be included as qualifying debt anyway. So there will be situations where a reminder or further notice has not been served, but the debt is treated as qualifying debt because all the instalments for that year have fallen due, and any of those instalments has not been paid, but we haven't actually issued a reminder or further notice for whatever reason. And also situations where a reminder or further notice has been served, but the person is not technically in arrears because they have brought the instalments up to date, but the debt will still be treated as qualifying debt anyway. In other words, they might have received a reminder, then immediately paid the amount on it. If all the instalments have not fallen due and no reminder or further notice has been issued, then the council tax or non-domestic rates is not qualifying debt, even if it is not up to date. It is therefore treated as being ongoing liability. As an example, imagine that today's date is the 15th of April and the customer's first instalment had been the 1st of April. If a reminder for that first instalment has already been issued, then the whole of the remaining debt for the year will be qualifying debt. If no reminder had been issued yet, then the whole liability for the year would be considered as ongoing liability and would be excluded from breathing space. It is usual for liabilities to change during a financial year. This could be due to a council tax discount changing or a change in a non-domestic rates rateable value, for example. So how do these affect the moratorium debt? What if a liability goes down during the moratorium period? The breathing space regulations state that we are not allowed to take a step to collect a moratorium debt from a debtor. However, we are required to issue demand notices where adjustments to the sum payable are made under both council tax and non-domestic rates regulations. The Institute of Revenue's Rating and Valuation have stated that they regard it is mandatory for us to issue notices where the sum payable has reduced. And they have said that ideally we should advise the debtor that the sum shown is included in the moratorium and ends on whatever date, and also notify the debt advice provider. But it is not clear at the moment how our revenue software will deal with this. What if a liability goes up during the moratorium period? In other words, there is new debt. Is that included in the moratorium debt? Any extra liability would be excluded because it didn't exist when the breathing space moratorium started. Again, it is not clear at the moment how our revenue software will deal with this. Hopefully, our software will be able to differentiate between the moratorium debt and any new liability within the same financial year by being able to separate them. But at this stage, we are not sure. In the first presentation, we said that contact between creditor or agent and debtor during a moratorium is restricted. Leading on from that, what if a debtor telephones us within a breathing space period? Should we immediately terminate the call? The regulations only state that the creditor cannot contact the debtor about debts included in a breathing space. If a debtor telephones the creditor, no such restrictions exist. However, it may be considered wise to explain that the breathing space debt should not be discussed other than through their debt advice provider. There are no restrictions on discussing other debts not included within the breathing space. The only action prohibited is contacting debtors with a view to collecting or enforcing payment. It does not appear that discussing balances outstanding, for example, would breach this restriction, but care must be exercised. Let's talk about some council tax joint and several liability issues. Imagine two people who are joint and severally liable for council tax. They don't have to be a couple, they could be father and son, for example. One is a millionaire and one has debt. If the one with the debt enters a breathing space, then they both enjoy the protections of the breathing space. But what if they are no longer living together and have separate lives? What if the second person has a debt in their own right? Can we pursue him or her for this debt? Yes, the moratorium debt would be the one relating to the person who applied for the breathing space. The other debt, if not joint and severally liable with the applicant, would be considered entirely separate and can be enforced as normal. Here is another scenario. Mr. A and Mrs. B are joint and severally liable for council tax. It doesn't matter if they are married or not. The point here is that there are two people who are living together and are joint and severally liable together. Mr. A has breathing space. Mrs. B doesn't have one, but any joint and several debt is within the moratorium. So does she benefit from it by association? As we've already said, the answer is yes. But then Mrs. B then leaves Mr. A. Does she take the benefits of the moratorium with her? Well, Mrs. B would still be protected for the joint and severally liable debt, even if she leaves Mr. A, if within the moratorium period. If Mrs. B then moves in with Mr. C, does he also inherit the moratorium, or is it only Mrs. B, as it is only for the name debt, not future liability? Well, Mr. C would not be liable for the debt that Mrs. B brought with her, and so doesn't need to be protected. The protections only relate to qualifying debts, not other debts that happen subsequently or non-eligible debt. So no surprises there. When processing this, you would normally create a new account number for the new liability because Mr. C cannot be added to any old joint and severally liable debt. If a summons has been issued and then a breathing space starts, can we get the liability order but then just hold the action? Well, different guidance on this has been issued. Following a seminar on breathing space, the Institute of Revenues Rating and Valuation have stated that they believe that we can proceed to obtain a liability order where we have already laid complaint and issued the summons, but that no action can be taken to enforce it after the liability order is granted. But they have also offered advice on their technical queries website, which contradicts this. So this is still being investigated. As for court costs, the regulations state that they cannot be enforced during the moratorium period. As we stated in the first presentation, an attachment of earnings order made before the start of the moratorium can continue as normal. But if we have applied for an attachment of earnings or benefit prior to the moratorium, but the payments are not received until after the moratorium, can we continue to receive the payments? Well, if the attachment order is made, that is issued to the employer before the start date of the moratorium, deductions can continue, even if no payments have been made yet. For deductions from benefits, only pre-existing deductions from universal credit can continue during the moratorium, not deductions from any other benefit and not new applications. In relation to housing benefit overpayments, the following is advice from the Institute of Revenues Rating and Valuation following questions raised by staff working in housing benefit overpayments. Question 1. During a breathing space, Are we allowed to send a customer an invoice for a housing benefit overpayment? Answer, yes. An invoice can be sent, but if on a breathing space, recovery cannot be set up. Question 2. During a breathing space, whilst I assume we cannot start a new clawback for housing benefit, do we have to pause an existing one? Answer, if a breathing space is agreed, then any outstanding recovery of housing benefit should be paused. But if the arrears are caused because of fraud, they can still be recovered. Question 3. During a breathing space, is it permissible to explain to a customer, by way of a written or emailed breakdown calculation, for example, how the overpayment was calculated? Answer, there is no reason not to give a full explanation of how the overpayment has occurred. In relation to enforcement agents, it is the local authority which is classed as the creditor for the purposes of these rules, not the enforcement agents. The local authority as creditor will be notified of a debtor entering a breathing space, so it's their responsibility to notify their enforcement agents accordingly. If they fail to notify them, the local authority as the creditor will be responsible for any costs, not the enforcement agents. Therefore, it is important that there are good channels of communication between revenues departments and their enforcement agents. Does a breathing space moratorium apply to a limited company if the sole director is in a breathing space? What about where there are two directors and only one is in a breathing space? Breathing space only applies to individual persons. It can apply to business debts, but only for debts owed by a person, not a limited company. It can also apply to partnerships, where both partners are joint and severally liable, and so action cannot be taken against either. If a director is personally subject to a breathing space moratorium, the limited company will be unaffected because it is a separate legal entity. Customers often ask us when they've received a summons if their credit rating will be affected. For obvious reasons, it is in our interest if they believe that to be the case, but our normal understanding is that this is not what happens because we use a magistrate's court rather than a county court. So when a debtor formally enters and leaves a breathing space, does this affect their credit rating? The government has stated that as yet it is undecided whether it will be entered onto a debtor's credit reference agency record. But it's likely that commercial lenders will want this as it would affect future lending decisions. Breathing space is going to affect all of us. We don't know how many we will receive, so we can't be sure how much extra work it will create. Hopefully our software will make this easier for us, but at the moment we cannot be sure of this. It is likely our procedures to deal with it will evolve as time goes on. Please ensure you are familiar with the rules by reading any information you are sent. This concludes this presentation. Please direct any questions to the email address shown here. When we have more information to share with you, particularly in relation to how our revenue software will handle these issues, we will provide additional training, or you will be issued with appropriate training documents. Thank you for taking the time to play these presentations.